Hey there, that's my pretty little mug in the picture. At Interanalyst, our track record proves this. The stock market's direction does not matter. What you own during that direction does matter. Lower your fund fees, build profits while markets rise, preserve those profits while markets decline, and retire up to 21 years sooner. What you're going to see right now is amazing. Because everything is based on correlation. And that's how you're going to get to retirement sooner, and I'm going to teach it to you right now. In the world of finance, correlation is a statistical measure of how two securities move in relation to each other. Correlation is computed into what is known as the correlation coefficient, which ranges between -1 and +1, as you see here. Statistical analysis proves something really amazing about correlation. Positive correlation implies that as one security moves, either up or down, the other security will move in lockstep, in the same direction. This chart is a great example of that. Here I have a picture of our correlation analysis software called Market Correlation 360. This tells us how correlated different investments are. Once I clicked Run, you can see in the part below here that the Dow Jones Industrial Average, the DIA, is 99% correlated. The RYNVX, which is the RIDEX NOVA Fund, is 99% correlated. The IWM, or the Russell 2000 Fund, is 98% correlated. The QQQ, or the NASDAQ, is 93.4% correlated. The SSO, which is a 2 times growth fund for S&P 500, is 82% correlated. In other words, these basically go up and down at the exact same times as the actual S&P 500. This is why you see at the top where I put positive correlation 80% plus. As long as it's 80% plus correlated, you want to own that kind of an investment, okay? So now that you know exactly that they go up and down together, let's take a look at the comparison of the growth, okay? And this is when we got in the market in 2009, and you can see that the GSPC, or the S&P 500, is the dark black one. It went up about 116.75%, okay? And what you see is the gray bar above, the gray performance above, and the gray performance below are both the Russell 2000 and the Dow Jones Industrial Average. So you can see how closely correlated they are. But let's take a look at the lighter blue one just above, and it went up 244.19% with better than 90% correlation. And that's the RYNVX, or the RIDEX NOVA Fund. So while the market's growing, why not own that since it's 90% correlated or better, okay? You might as well make more money while the market goes up. Okay, while your friends are buying and holding, you're going up even faster. Now, what about the green one? Okay, well, the green one is 2 times the performance of the S&P 500, or essentially, it went up almost 400% during the same exact period of time. Stunning, okay? Okay, now let's take a look at negative correlation. Negative correlation, or -1 there, implies that as one security moves either up or down, the other security will move in lockstep in the opposite direction, as you see here in this chart. Also, take a look at this report here from Market Correlation 360 that shows that the SH, or the short fund for the S&P 500, moves better than 80% of the time in direct negative correlation. Okay? So what does that teach us? Let's learn. As you see in the performance chart, while the market collapsed in 2008, you could have made a boatload rather than lose a boatload. You can see the green growth bar there. It's the actual inverse fund of the S&P 500. Okay? So while the market collapses with no shorting, no leverage shorting, or anything super risky, you could have grown your money rather than lost it. Okay? Now that you understand how correlation works, let's take a look at the Wealth Preserver subscription. Each colored bar represents a month. Arrows are only confirmed and locked in the last trading day of each month. When you see a green up arrow, like this one, buy and continue to buy within your brokerage or retirement plan account until you see a red arrow appear. When a red arrow does appear, it indicates to sell your investments and avoid much of a serious decline in your retirement account. When you do sell under the red arrow, your money will automatically settle into a money market account within your retirement plan or discount brokerage account. Nope, not every arrow is perfect, but wouldn't you rather be safe than sorry like most people in 2008? Because the red arrow locks in the high growth you captured under the prior green arrow. Then all you do is wait for the next green arrow. That's all there is to it. Green arrows mean invest, red arrows mean preserve and protect. Now that you know how the Wealth Preserver works, I want you to know that this scrolling chart is real. The arrows are filed quarterly with Finken & Associates CPAs to certify, authenticate, and validate all green and red arrows. I'm going to shut up right now for a few moments and just let you watch how deadly accurate our proprietary system's arrows have proven to be. I'll be back shortly. Okay, now that you know exactly how the performance works, how the arrows are created, and that they're authenticated, let's take a look at how those arrows work with multiple different investments, including the ones in your 401k plan or IRA or those with your discount broker. Here we are, we're on the Interanalyst performance report. This performance report, as I scroll down, is going to show you the performance of the asset that you put in there or the investment. Okay, let's just assume that you have a 401k plan. A lot of people have told me, hey, Livio, I have a 401k, this isn't going to work. It couldn't be farther from the truth, to be honest with you. What you simply have to do is come over here and enter this. And let's just assume that your retirement plan has the Vanguard funds in it, okay? All you need to do here is just type one of those funds in. Well, I'll just use one of the Vanguards, VFINX, okay? And hit go. And what you see here is that since January of 2000, if you would have had this retirement plan and you would have had the Wealth Preserver arrow signals, you would be way ahead of everybody else. Today, in fact, with buy and hold, that Vanguard index fund of the S&P 500 would have grown from 100,000, we're just assuming 100,000, to 182,000. Using our signals, you could have grown to $496,000 or a 478% greater profit. That is within your 401k plan. So of course it works. Now whether you have Vanguard or you have Fidelity or some other family of funds does not matter. Just follow our signals within that and you'll have some super substantial growth. Okay, now let me put in another one. A lot of people own Berkshire Hathaway for Warren Buffett. Let's see how we do against Berkshire Hathaway. So we'll put in BRK-A, which is their A shares, and their B shares grow about the same. Okay, and we see that the performance here, we beat them by 193% over the same period of time. So go ahead and own your Berkshire Hathaway. But why don't you outperform everybody who also owns it by almost 200%? Okay, that is substantial. And a lot of people like to own the NASDAQ, okay? And if you want to own the NASDAQ and you want to trade within your discount brokerage account, you can do that too. So just put in the QQQ, which is the ETF for the NASDAQ, and you hit go. And you can see compared to the NASDAQ, we had 1,946% greater profit, okay, over the same period of time. So instead of going in 2000 with 100,000 growing to 125,800 today in this chart, you could have grown to over 600,000, okay? That is the power of correlation analysis and the Wealth Preserver and how you can get to retirement much, much faster. As if the Wealth Preserver wasn't enough, we have what's called the Wealth Maximizer. It is a complementary subscription to the Wealth Preserver and really can boost your rates of return. And for those of you who have 401k plans, I'm going to really quickly teach you how it benefits you. Also, those of you who have retirement discount with discount brokers like IRAs and things like that are there, it's an amazing tool. Just take a look. What we did was we took our correlation analysis and we used what's called a correlation filter. And as you well know, what we do is built a database of correlated assets and uncorrelated assets. We also added what was called a performance filter. We wanted to make sure that we could find assets that really perform well, that are both correlated and uncorrelated. Then what we did, we looked at our historical filter. We wanted to make sure that the assets that we're going to let you find have been around long enough to be trustworthy to own, okay? So what we do is we come down here to the bottom, and this is essentially the Wealth Maximizer's tool. And what this is going to do is allow you to find those assets. The first thing we want to do, just as an example, is set up our sort criteria. The first thing we're going to do is say correlation. So all we're trying to find right now is those assets that are the most correlated to the S&P. You'd select that as your sort criteria 1 and you'd hit submit. There you find all the assets, and right here you'll see the correlation. We also show you what the buy and hold rate of return is of 3.11% in this case since 2000. Okay, so since 2000 it has averaged 3.11%. Interanalyst, using our Wealth Preserver signals, got 9.22% per year. That's 300% better performance, okay, by simply using the Wealth Preserver. So here you found a vehicle. Now, let's do this by saying, okay, I have a 401k plan, all right? And I know that within that 401k plan are Vanguard funds. All you need to do is click down here and go limit name filter, stock or fund name, and then type in Vanguard, okay? All right, that's it. Now watch what happens when we hit submit. Submit changes these to all the Vanguard funds. Okay, and it has Vanguard stock fund, index fund has 99% correlation. Okay, and it averaged 4.5%. Fortunately, if you would have used Interanalyst signals from the Wealth Preserver, you'd have done 10.269% per year. Well, some of you might not have Vanguard in your 401k plan or retirement plan, but might have Fidelity. All right, there you go. There's the Fidelity funds. And if yours isn't listed in this first screen, don't worry about it. You can go to the next screen. You might find it there. And you just keep going because it has them all listed. Over 300,000 securities are analyzed and run against correlation and our signals in the Wealth Preserver. So immediately, whether you have or don't have a 401k plan, you can apply this to your accounts. But for those of you in 401k plans, just type in the name of the fund family within your 401k and you're going to see how well they perform with the Wealth Preserver. Okay, now, for those of you who have discount brokerage accounts, let's just take a look at pure performance because it really doesn't matter within your discount broker. You can buy basically anything. So let's take a look at performance, okay? Let's hit submit because this is, let's turn off the fund family symbols and just do submit here. And you're going to see here that there's some assets that got better than 233% a year using our signals. Now they did well anyway, but we still did better than 12 or 13% better than this one. We did 10% better than this one a year since 2000. Now, you could see, though, that this doesn't have tremendous correlation. Why invest in it? Why take that chance when you can go down here and right here, the number 6 fund is Universal Insurance Holdings. It has better than 82% correlation. And you remember, anything better than 80%, you're going to be doing pretty good. In this case, it did 59%. We did 67%, okay? And so you think to yourself, wow, that's pretty doggone good, okay? What about Monster Beverage, okay? Here's Monster Beverage. It has 86% correlation, almost 90%, okay? So you take a look at Monster, and it did 53%, and we did 56%. Wow. You think to yourself, that's crazy. That's only 3%. Well, that 3% is huge. I'm going to quickly switch over to our performance chart. Okay, and let's just put in Monster. Okay, M-N-S-T. Okay, and hit go. Okay, there's Monster Beverage. Only 3% pays for your subscription for life. The subscription is so cheap based on the value of the returns and avoiding declines, it is ridiculous. Okay, so let's go back to the Wealth Maximizer. And I want to teach you something that's really cool here. You can actually come in here if you have discount brokerage accounts, and you can limit it by sectors. You can pick any sector in the economy on a global basis. So getting the Wealth Maximizer added to your Wealth Preserver is a simple decision. Okay, let's seal this up by taking a look at some additional questions. First, bear market questions. Did your investments go down in 2008, and do you want your retirement value to go down again? Is it lower risk to lose money when the markets decline with buy and hold, or sit on the sidelines and preserve your wealth? Or is it lower risk to lose money with the markets decline with buy and hold, or to make money with investments that grow because of their perfect correlation to the S&P 500? We think the answer is obvious. Now let's ask just a single bull market question. Is it lower risk to buy and hold or to grow your money faster than ever with correlation? As you can see with the charts, and depending on the asset, the answer becomes obvious. The answers to these questions are obvious, but I'm going to ask you one more question. Do you want to go with the regular pack and wait years and years and years to get to retirement? Or would you rather use a tool or tools that can get you retirement faster than ever before? In fact, up to 21 years faster. If your answer to that question is you want to speed it up, then get your Wealth Preserver and your Wealth Maximizer immediately.